Bonjour à tous dans la salle et sur AXA.com.
Welcome both in the room and on AXA.com. We're going to be presenting H1 2012 results with Henri de Castres and Denis Duverne. For the Q&A session, we have here a few of our members, Véronique Veil, Nicolas Moreau, and Jean Granier, who will be able to answer your questions asked in the room, but those of you who are listening to us on AXA.com can ask your questions, and I will now give the floor to Henri de Castres. Good morning, everyone. Welcome to an almost deserted Paris to listen to our half-year results, which are results that, in our opinion, are robust in an environment which has been rather agitated of late. And this is the first page of our presentation that we share with you today. In fact, if we compare the results of this half year versus the first half year of last year, i.e. 2012, there has been a deep-rooted deterioration in the environment. We have seen a drop in earnings in many countries worldwide, and particularly in developed markets, which, although we are increasing our activity in emerging markets, these mature markets remain the essence of our business. And we have had here US, Germany, UK, France, that have been impacted, and of course equity markets have dropped as well. So an unfavorable macroeconomic activity is unfavorable to such activities as ours, and despite this situation, our results are solid. Solid because we've maintained our revenue streams. You can see that these streams have increased modestly, but nonetheless have increased. And also by the results indicators, particularly the underlying earnings, which remain stable or slightly up. All of this in a context, and I think it is extremely important that a financial institution where balance sheets is extremely solid, where shareholders' equity are a little under 50 billion euros. Solvency ratios have reached high levels, as you will see later on in the details of our presentation. So a difficult context, solid results as regards the level of our business activities and their profitability. Why are we in this particular situation, and why does this allow us to expect the future with a certain degree of serenity, although we know that the context may remain turbulent, relatively so? It seems to us that our model is one which quarter after quarter, half year after half year, demonstrates its robustness, its capacity to adapt to the environment we're experiencing. Our business activities, in our core business at least, are highly diversified geographically and between segments. The activities which are perhaps least impacted by the financial markets represent 3/4 of our underlying earnings: protection and health, and property and casualty. Life savings represent 1/4. Prior to the financial crisis, this segment was very strong. It's been suffering over the past few years, but the results remain nonetheless significant. But you can see that it is a 3-engine powered plane, 2 turning full speed and 1 slightly degraded. As regards Solvency I, which applies to balance sheets today, the ratio is at a historical high. It may change when Solvency II, which may be applied tomorrow, may bring in their impact, but discussions are still underway with European authorities. We've made slight progress, but we still find ourselves sometimes unable to progress further because of the equivalence for activities outside of Europe. The European Commissioner has made fairly strong engagements and promises. there have been no significant progresses made over the past few weeks. Now, as regards Solvency II, when we look at the position of the ratio, taking into account the equivalence, which in our opinion is now reasonable, we can see that it has dropped slightly, essentially due to the drop in interest rates and equity markets, but it remains at a very high level, 174%. So we are quite comfortable in this position. We're also comfortable as regards the fact that we are moving ahead clearly along the lines of Ambition AXA, which is our new strat plan. As you know that the three pillars involve greater selectivity in our business mixes, accelerating on markets and modes of distribution which have a significant potential for growth or margin production, and also efforts of productivity and efficiency in our geographies and business lines overall. When we measure the performance over H1 2012, we can see that our progress is strong. And if you take a look at the page that is now displayed on screen, you can see that what is continuing to occur in life savings is a fairly revealing factor of the results of the efforts we have undertaken. We want to accelerate the development of our activities in protection and health. You can see that over the past 2 years, between H1 2010 and H1 2012, you can see that we've gone from 30 to over 40%. So this is an increase of this particular business component, which add to the mix in general. The margins here are high because they are decorrelated from the markets. You can see that these margins, 43% on new business values, as I've said, are fairly largely decorrelated from the markets. Also, we have tried to maintain and even to develop the share of mutual funds and unit-linked. You can see that this share has remained stable over the past 2 years, despite markets that have not been very favorable to unit-linked products. Why do we want to do this? Well, because our margins there are quite satisfactory, and we believe that these products are attractive for our clients. Because if we take long-term historical averages, we can see that the markets now are at relatively low levels. So this is a pretty positive approach for the future. And now, other business is perhaps least interesting both for our clients and for ourselves, which is general funds and savings. Their share has dropped by approximately 10 basis points in the whole. So what has happened as regards the business mix is what we expected and planned for. The second point here on Ambition AXA is to be able here to work on P&C. And this represents a large share of the group's activities with a margin for growth and performance improvement. And this is exactly what the first 6 months of this year have shown. An increase here in our revenue of plus 4%. Which is composed of different elements. First of all, high growth markets, between 15 and 20% of our P&C revenue come from those markets. Quite significant aspects as well on lines that we call commercial lines, business lines, and individual lines. We have a little above 600,000 policyholders added to our initial number at the beginning of the year. So the global growth of the PIBs here also is impacted. Now we can see a ratio, a combined ratio, which has improved by almost 1 point. We are still under our 2015 objectives, but we're still 3 years away from 2015. We were a little above 97% last year. We're at 96.4% this year. We find that this is progress. Now, as far as efficiency is concerned, work is still ongoing in this area. Dominique Vell's teams and the teams group-wide have continued to invest in productivity gains. to speed up multi-access and the digital approach to our business for the group. We now here had set an objective of 1.5 for 2015. We're talking about 1.5 billion euros, of course. So we still have time ahead of us to be able to reach that objective, which is why we feel we are in an extremely comfortable position and quite confident that we will reach this objective. The operational efforts we're undertaking and other inflows contribute fairly significantly to the achievement of this objective. Now, a word on the revving up of our activities, because this is very important during uncertain times. Revving up isn't just a slogan, it's authentic, genuine. And if you look at the progress made by our revenue lines in life and savings as in the segment of P&C on those markets where we wanted to speed things up, we have reached practically 10% growth in Asia in life, and we are at 17% on P&C. Adding to this a number of other evolutions in scope, which we believe will be promising for the future as regards accelerated revenue growth and strong margins. We have now officially launched a few days ago in China our joint company with ICBC, the very large Chinese bank. They have 60% interest. We have almost 30%. Revving up here of sales as of the first days following the launch was spectacular. We also, during the first half year, as you've seen, proceeded with the extension operation in Asia to cover Mexico as well. And this, of course, brings us to another level regarding size in P&C. So we are maintaining the redeployment of our capital towards these new high-growth economies where we believe that we can expect significant yields in the future. These were my introductory remarks before I give the floor to Dennis to go into the details. Retain this, please, within an extremely turbulent context and the significant uncertainties regarding Eurozone. We have maintained significant operations and performance, and which demonstrate that we are able to achieve the objectives we set for ourselves within Ambition AXA.
Bonjour à tous.
Good morning. I will now begin by covering our life and savings business. And this first page shows some of the components mentioned by Henri. Over the first 6 months, sales have remained stable, but of course, our commercial approach is aligned with what we seek, progress of 5% in protection and health. In France, in particular, we have launched a dependency product quite successfully. The product is very interesting for the future. You can see here that as regards general account savings, we have a drop of about 6%, which once again is aligned with our strategy. Very often these savings products are very often sold, and this is the case in France, as a component of unit-linked products. These unit links being very slightly down, minus 3%. And mutual funds and others have shown a plus 2% progress, particularly thanks to Elevate, the successful sales platform in the UK. Here, a few words on this 43% margin in protection and health. This may seem very high. It is a computation which is based on the value of future profits aligned with a periodical premium for the first year, knowing that this will be an ongoing thing for the years to come. And here we are dealing with the value of future profits reconciled with the premium of the first year, or aligned with it. Now, new business value, 84% of our sales are still in mature markets, 16% on high growth or emerging markets. 2 years ago, we were at 10% only on high growth markets and 90% in developed markets or mature markets. So you can see that this evolution in the business mix is quite favorable, is ongoing, but of course cannot be finalized within a single year. In Southeast Asia, China and India, we have 18% growth. And the revenues stemming from very favorable activities such as in Thailand, where our protection products have shown a growth of 54%. Hong Kong sales remain stable with a slowdown on unit-linked, but a stable position as regards to other aspects. Now, we also can see a very strong decrease of 36% in Central Europe, which is the result of the modification on pension fund regulations in Poland. And the pension funds practically no longer bring in new money, and we have therefore had to redeploy our sales forces on traditional insurance products. This redeployment is not quick to be implemented, so there is a decrease in this region, which of course penalizes our results for H1 2012. Now, a few comments on mature markets. We can see strong progress in Japan during these first 6 months, with 9% in all. And you can see here high selectivity with satisfactory growth in protection and health, whereas euro-based funds have dropped. Now, net inflow in France has reached break even, which puts us in a very different position from other players on the French market. Now, if we zoom in on a low interest rate environment regarding our general fund, first semester 2012, 3.8% group savings. This can be compared with guaranteed rates, which on the average hover around 2.2%. Which gives us a margin of 60 basis points. Also, average guaranteed rate for new business at 0.7%, because these activities have very low guaranteed rates, which means that even if this very low interest rate environment were to remain ongoing for several years, we would still be able to have positive results and service our clients to their satisfaction. So we have a cautionary cum dynamic policy, which gives us a certain degree of comfort as regards the way in which we manage these activities. The AXA Group has at its disposal approximately 10 billion euros in its provision for the future. So we are fairly serene as regards the management of this Euro General Fund. Now here, the underlying earnings per business area. We can see here the high performance of the three major areas. We can see progress of plus 9% in protection and health, global progress of plus 3% for the savings general fund, which demonstrates that we can maintain our margins in this area despite the drop in rates. Strong progress in unit linked at plus 28%, essentially resulting both from acquisition fees in Italy with our MPS activities and also beneficiary participation in France. Now, the only segment which is, of course, disappointing during these first 6 months of the year is that of variable annuities in the U.S., where we are slightly negative, knowing that the contribution of life insurance from the U.S. remains substantially positive at over 200 million euros. So underlying earnings as well of life and savings plus 3% at comparable exchange rate, and plus 7% as published. You can see on the right-hand side of this slide the contributions of the different countries. This performance is the result both of the improvement of the activity mix that I've already described, but also through the general funds, thanks to the approach described by Henry. We can see here the results in Japan, where results exceed 100%, which is synonymous, of course, with a favorable tax impact, but also particularly versus last year, where the results have been impacted by the earthquake and the tsunami. We can also see strong growth in Switzerland and on high growth markets as well. So strong underlying earnings in life insurance. This is the message that I would like you to retain. Now, if we look at property and casualty, first of all, as regards the business itself, Henri de Castres has said that we've seen a progress of approximately 4% in this area. I would like to retain here three major trends. Here our revenues have progressed almost on all markets except for direct insurance in the UK, where we have undertaken portfolio cleansing after very quick growth periods, and of the Spanish market, which is impacted by the crisis. Individuals have ceased to buy cars, and clients now are seeking less costly guarantees. More generally speaking, P&C tariffs have increased in most of our markets, and we have attracted more personal line clients, which means that our offer is still competitive and relevant, with 637,000 new contracts. Commercial lines, also we can see here an progress, and AXA Direct ex UK has demonstrated growth of approximately 10%. Now, in commercial lines, again, we've seen revving up here. This has progressed by 5% on a comparable basis, 8% published, and we can see very strong dynamism on high growth markets, but also a turnaround of tariffs in mature markets. Now, as regards profitability, you can see that we have a slight drop in the loss ratio from 72.4 to 72.2%. This drop is impacted by an increase in the number of natural disasters, which of course are costing us 0.4 points, but also a higher cost of freezing episodes, representing here an increase of 0.9%, which means that the minus 0.6% here are synonymous with very high quality underwriting, because we have been able here to improve our ratio. We can see a drop here in our expense ratio from 26.8% same time last year to 26.3% this year. So obviously this has an impact on P&C. So the current year combined ratio, which corresponds to the underwritten premiums of the year, is down by 0.7 points, while we have a progress of minus 0.8, which is 97.2% in H1 2011 and 96.4% same period this year. If we now look at the adjusted earnings, we can see underlying earnings. We can see here a comparable basis of plus 0.4% and published at plus 6%, borne forward by strong results in France, the first contributor with almost 1/4 of the results in its basket, and we can also see a drop elsewhere. Now, asset management per se, you can see that on this slide, assets under management have increased by 40 billion euros versus end 2011, largely due to the impact of the interest rates, which of course has led to a reappreciation of bond-related rates. As you know, AXA Investment Manager and AllianceBernstein manage both assets for the group's insurance companies and for third parties, and you have the details of this activity on the right-hand side of this slide. In all, the group here manages 1.1 billion euros, slightly up versus last year. And our group remains among the first 5 asset managers worldwide. Now, if we look at the indicators of our asset management business, we can see a drop here within the managers' companies themselves. You can see AllianceBernstein and AXA IM and their evolution here. Net inflow, which can be called an outflow because it is negative, but it is certainly in a much better position than in the 2 preceding years, i.e. 2010 and 2011. And we can see that there are more contrasted performances at AllianceBernstein, although the performance of AXA Investment Managers has increased, which seems to point to the fact that Peter Krause's teams and their efforts undertaken over the past few years are beginning to bear fruit. Now, here the underlying earnings, we can see up 2% versus published information, minus 4% on comparable basis. We can see AXA Investment Managers generated in dollars here, and AXA Investment Managers dropped by 17%. AllianceBernstein increased by plus 19%. This involves, of course, a more favorable tax environment and also the control of expenses, which were controlled on the same tack as expenses due to negative inflow. Now, if we summarize here the global position of the group, revenue up, of course, here 0.8%. This is the result of the different trends that I've already described. The underlying here is stable and constant exchange rate, and I've already commented on life and savings, P&C, and asset management. A few words now on international insurance, which has dropped by 18%. Both activities, AXA Corporate Solutions, major industrial risk entity, and AXA Assistance, have 80 million in stable results for AXA Corporate and 11 million for AXA Assistance. So the drop essentially is the result of the underlying earnings of our runoff management activities. We have old portfolios of insurance and runoffs which yielded excellent results in the preceding years. But as the level of engagement decreases on these contracts, we will, of course, see a drop in the results of these activities per se. But AXA Corporate and AXA Assistance are maintaining strong positions. Now let us look at the adjusted earnings and net income. Here, adjusted earnings, of course, benefit from the improvement of the underlying earnings, but also reflect the position of the financial markets for the beginning of 2012 with a global progression of plus 1% in published. But, of course, here we have less unrealized capital gains, and last year we had begun to depreciate our Greek equity, but this is no longer the case, but we still here have a slight weakness in this position. Last year, as regards net income, we, of course, had been seeing that our results had been mainly driven by the non-repetition of exceptional gains in Taikong Life stake at 0.7 billion euros and Australia and New Zealand operations at 0.7 billion euros sales versus H1. In H1 versus H12. Now, as regards to balance sheet indicators, just to repeat that the group here has maintained, even improved its financial robustness. When we analyze the shareholders' equity, we see that they have increased by approximately 2 billion euros, which in itself reflects the net unrealized capital gain position. We here have a drop of 2 billion euros in view of a change on DAC regulations, deferred acquisition costs, and this was offset by the result that we have put forward and the improvement of unrealized capital gains. Now, Solvency I ratio maintained a strong position at 207%, both driven by resilient underlying earnings and higher unrealized capital gains. Economic solvency is down slightly to 174% due to the market evolutions on H1 2012, but the situation is quite favorable. Debt gearing suffers mechanically from the change in the DAC accounting methodology, but its position is still very comfortable, 27%. Net here, we can see that our financial management approach is quite conservative. If we now look at the general account assets, you can, at 479 billion euros, you can see that they are measured according to their market value at June 30th, and these asset values are matched with the engagements of our policyholders, and of course these must be the reflection of these engagements. We can see here a duration in our portfolio that exceeds 8 years. You can see that we have bonds, 8%, both state and corporate, and other types of bonds. We have maintained this allocation during the first 6 months of the year. We have invested approximately 1/4 of our new investments of 25 billion in government bonds and approximately half in private sector bonds, the rest in other asset classes. Now, if we look at our exposure regarding the sovereign equities, we can see here that we have slightly changed our position, 3 billion euros. The amount of this exposure represents approximately 10% of our government bond assets and only 5% of our total invested assets. Now, if we look at net unrealized capital gains, they represent 10.4 billion euros. If we look at those that are on the balance sheet, 7 billion, and those that, of course, here have a bearing on real estate loans, 3 billion. Now, when we look at the unrealized capital gains on the government bonds per country, we can see that in view of the fact that our investment portfolio, which has a limited exposure to the peripheral zone of the Eurozone, have increased slightly due to the drop in interest rates. They've increased by 2 billion euros, share which is returned to shareholders, therefore, after impact of other distribution operations. Now, the diversification of AXA's business approach remains both profitable and conservative. Thank you for your attention. I'm going to return the floor to Henri de Castries. Thank you, Dennis. I don't think that there is much to be added here, simply to remind you once again of the fact that in an environment that has been and remains difficult, these results are solid, which means that we will continue to implement the priority objectives of Ambition AXA in the coming semesters and years, because we believe that this is the best way for us to guarantee client satisfaction and to create value for our shareholders. And we are now prepared to take your questions. So let's begin with questions in the room. You will be given a microphone. Simply for those of you who are not in the room, please tell us who you are before you ask a question. Thank you. Thank you. 2 questions. Could you explain the development of your activities in Germany? And what is your central approach to the Eurozone? And would you be prepared to increase your engagement to peripheral sovereign funds? Well, these questions would warrant huge developments. I will begin with the second part of that question at least. As regards the Eurozone, I think that we need to differentiate short-term turbulence from long-term evolutions. In the short term, it seems obvious to us that things may remain turbulent and agitated, but in the long term, we are more serene. What environment do we find ourselves in? Well, we now need to offset mistakes or insufficiencies which are the result of decisions made over practically a full generation. These are of two types. First of all, excessive spend on the part of the governments and insufficient structural reforms for a certain number of countries in the Eurozone. This is certainly the first type of mistake to correct. The second involves the construction of the euro itself, which we can consider as successful, at least in Europe, for 10 years. But this, of course, hid insufficiencies, particularly as regards crisis resolution approaches. So in all of these cases, the government and the central banks have now, over the past 2 to 3 years, begun to work on these aspects. It would be naive to expect this to be solved over only a few quarters. So we need to examine the fundamental measures that have been taken and to see whether in the long term they will have the impact expected. Now, very serious studies are being implemented in significant economies in the Eurozone, such as in Spain and Italy. And we believe that this should lead to better managed budgets and higher performance economies when the effects of these reforms will begin to be felt. And we have also observed that although it is a difficult process because off-the-cuff operations are always much more difficult than more cold-blooded decisions. And so as regards Eurozone and other institutions and the idea of moving towards a banking union, we believe that if this continues, things are moving in the right direction. And it also seems to us that in all of this, Germany is a constructive stability channel. It worked on its reforms before other countries, has applied a reasonable policy in these financial areas, can also be used as an example for its partners, but can also demonstrate whenever the crisis situation requires it, be flexible enough to avoid having a negative impact on the situation. So I think that we are moving in the right direction. We will be fully convinced of it when the second economy of Eurozone, which is France, will also implement authentic structural reforms and demonstrate that it is able to reduce its public debt. Now, of course, in the short term, things are more turbulent because markets are impatient. And they've gone from a state which up until 2008, they gave loans of intention to the European construction and to the construction of the Eurozone. And now, of course, they have taken the completely opposite position where any movement in this area is probably the result of cynical people putting their heads together to develop things further. So this is a risk that we consider as an accident along the way, i.e. the risk that those states who have indeed implemented deep-rooted structural reforms and who do not yet benefit from these reforms because of the state of the interest rates themselves feel finally discouraged. And I think that this is what was indicated by the central bank, helping countries that are really working on implementing these deep-rooted structural reforms to draw the benefits from these reforms as quickly as possible. And I think that we can see here the appearance of a new policy, and that in particular a new approach where if we are to restore budgetary balance, we have to differentiate the structural from the conjectural. and of course we can bring down to zero the structural deficit, we can be a little more lenient as regards the conjectural aspect. Now, as regards Germany, we are very significant investors as regards the debt levels in the Eurozone. You can see that what we have at our disposal largely exceeds the unrealized capital gains that we have not yet worked on. We no longer own anything in Greece in terms of investments, and we do have here investments in the Italian and European debt areas, but what we are building today, in other words, as Dennis has shown you, 600 million euros, should be compared to the total value of the group's realized capital gains, 10 billion euros, and of course the impact that this has on the other sovereign debts of other Eurozone countries. Now, if I simply take the stock of debt of the French debt, this represents twice the unrealized capital gains of Italy and Spain. So we find ourselves in a position that we judge to be comfortable, reasonable at least. So much for Eurozone. Now, Germany, our activities in Germany are continuing to unravel under satisfactory conditions, although Germany is within the scope of the traditional country activities of the group, the one where the most stringent productivity gain efforts must be undertaken. In Germany, we have major potential. Thomas Buber, who is also there in Germany, has again returned to this particular project quite energetically and firmly, and we have absolutely no doubt that the efforts that he has begun to implement, and particularly the discussions with the unions, will bear fruit and help us to further strengthen the efficiency and profitability of our German activities. Long answer to the first question. Another question? Yes. Fabien Benedetti, Bloomberg. I'd like just to return to the debt of Spain. Have you returned to your acquisitions in Spain as a follow-up to the discussions at European level in June? Well, and as regards private equity, so AXA Private Equity, we have clearly said that we considered divesting a share of the capital we own in the management company, which doesn't mean that we're reducing our investment in that particular asset class. But we consider that for the balance of the activities of the group, holding 100% of the management company is neither necessary nor really the best way to develop things. It's an extremely marginal and peripheral aspect if we look at the total weight of the activities of the group. Things are moving ahead and they will find reasonable conclusion within a reasonable time frame. Dennis, can you give us an answer to the details of acquisitions that we won't give you on a day-to-day basis, says Henry? No, as regards to debt in Spain, we have not purchased any sovereign debt during the first 6 months because the cash flows of our activities in P&C and savings for general funds at least did not require us to do this. Another question? Good morning. A few questions on Monte Paschi regarding the turnaround plan that they've implemented. What is your opinion? And do you think that this will help them increase their stock price, which is right now extremely low? And also, the company has asked for a state loan, which if it is not fully reimbursed, there could be the eruption of the Italian government in the Monte Paschi Bank. Well, first of all, you need to know that the economic core of these activities in Italy is, of course, the common company the shared business we have there with Monte Paschi AXA. AXA MPS. These activities are doing well. We are delighted with the performance of our shared activities, which are continuing to grow. In Jean-Laurent Garnier, who is in this room in the first row, can tell you more if you wish. But the industrial activities that we share with them are doing well. Finally, we are also shareholders in the bank. And we believe that in the long term, it is a retail bank in Italy which has a strong market position and which has to be profitable. It is quite undeniable that it needs to undertake major turnaround efforts in the short term. Everyone is aware of the history behind this, and we believe that the new management team is undertaking the necessary efforts to return to a healthier situation, and we believe that these efforts will be successful. Now, of course, in order to do this, they had to strengthen their shareholders' equity to satisfy European regulations. They are currently finding the means to do this, and this should, of course, strengthen industrial turnaround efforts. Also, the strategy that we've undertaken with AXA MPS is perfectly aligned with the one we apply throughout the group, focusing on protection. In the industrial plan of the bank itself has said that it wants to be the site of protection, and thanks to this particular approach and thanks to the P&C approach, the dynamics remain strong. I think there was a question from Madame de Guigné. Good morning, Madame de Guigné Figaro. I wanted to ask a brief question regarding life insurance in France. Do you think that the interest rates will remain low in the short term? And if that is the case, how do you approach the impact this can have on the activities? And I imagine you also have a projection as regards capital flows in the future? Right. Nicolas, do you wish to answer this question? First row. Nicolas Moreau, head of AXA France. Our scenarios as regards rates on life insurance, a little too early to talk about this. Last year, I think the market had returned about 3%. Since then, interest rates have dropped. French interest rates have dropped, and reinvestment rates are below what we had experienced in the preceding years. So it is quite probable that these rates will drop versus these 3%. Now, portfolios are significant, and they can be marginally down versus these 3%. The Livret A itself, which is a savings plan, you here have the figures, which are between 10 and 20 billion in a decrease as regards assets under management. Now, doubling of this particular investment plan, it's 30,000 euros. We have clients who pay more than that, and these can be higher amounts. And this may not necessarily be fully adapted. You can say what you want, says Henry, but with life insurance, we can do many things. We prepare retirement, we prepare transmission of assets, we finance projects, we do many things with life insurance, whereas the savings plan, the Livret A in France, is not necessarily the best tool. We're wondering if the doubling here wouldn't also involve enhanced and increased social charges on this savings plan. And there are those who have very limited means, and they use their savings plan for their daily requirements. So I think that the government is continuing to wonder whether they should or not double the amounts that can be paid into the Livret A savings plan. Also, we have been visited Well, actually, there are public investigations and surveys that have been organized to see whether this is popular or not. This is not what will be detrimental to life insurance. It takes maybe 10, 20 billion of our provisions out of 400 billion. This is not necessarily something which will ring the death of life insurance. You see that we have many unit-linked products, and we are thinking of investing in perhaps riskier products, which can be more interesting because at some point interest rates are going to rise. And if we are prepared with products that are not necessarily sensitive to this, it's good. You know, if we want to return to growth in this country, we need to promote investment and long-term investment. Livret A is a tax incentivized short-term plan. And life insurance, as Nicholas has just reminded you of, is a long-term product because the advantages of life insurance can only be materialized after an 8-year period of holding the policy. It allows us to invest in long-term assets of our economy, and therefore this is an approach which corresponds perfectly to what is necessary if we want to promote investments. So if the government draws the logical conclusions, the environment of life insurance should remain stable, and competition from Livret A savings plans should be marginal. I think that we should also add, as I said before, that in France we have been able to do better than the market. In other words, to have a break-even for net inflow. We also have a strong presence in collective insurance, and we have strongly developed all of our protection activities as regards dependency insurance, and we feel that we are well equipped to continue to face up to this difficult environment. Following question, yes? Yes, Lionel Garnier, Le Revenu. I have 3 questions, please. The first involves China and this agreement that is finally become operational with ICBC. At which date can we expect the positive impact for the AXA accounts? When will we see an impact on the underlying earnings of the group? Secondly, as regards the financial agreement and private investments, what are the results that you're expecting, let's say within 18, 24 months, and what yield differential may this involve compared to what is the traditional corporate yield? And also you have here a 3.8 portfolio yield June 30th. Or at least that's what I understood. What are your perspectives for 2012, and what can we expect over the next 2 years in view of the fact that today the investments in government bonds are very, very low? So what is the drop trend that we can expect? Well, as regards ICBC, we had begun to work with ICBC before the agreement, i.e. the transfer modification of the balance in the shareholding structure was actually implemented. But since the joint venture has been officially launched, in other words, since the regulatory authorization has been given by Chinese authorities, well, sales volumes have increased. And here we will see happen what happens in all quick developments of a life insurance company, is that the revenues increase immediately, but results don't, because we are first submitted to the acquisition cost to rev up business. So we're going to have to wait until circa 2015 to see here an impact on underlying revenue. Earnings, but business itself brings in immediate money. You bring in business right away, but the profitability will be spread over time. Our approach here to the Chinese market will involve convincing our partners to adopt a good business mix. Because the temptation on these high-growth emerging markets for our partners is volume, having the feeling that volume generates margin. but single premiums are not necessarily the most profitable aspects. Recurring premiums are, although they are less spectacular volume-wise. But we are reasonably confident, and ICBC is an extremely powerful bank. It is the first Chinese bank. It is also the world's first. They have 240 million clients. The ICBC chairman has clearly reaffirmed the objective that this should be the first company to become the #1 foreign insurance player on the Chinese market and the first or third player worldwide. So this allows us to feel quite confident. To give you an idea of what this can represent in terms of volume, the investments in shareholders is 1.5 billion for the next few years, and 500 million on our part. So it is a significant investment, which should bring significant support to the business itself. As regards what we call corporate loans for large and average-sized companies, we have this agreement with Société Générale, and I think there was a press release that you are, I'm sure, aware of that came out this week. We are also called upon by banks from other European countries, so we are relatively optimistic as to the fact that we can have several agreements of the same type, but we must not oversell this activity. We're expecting 500 million under management within the end of the year and perhaps 2 billion within 2 years. If we have 3 or 4 banks with which we can sign agreements on a general fund of 480 billion. So this is not the only factor which will change the yield of our assets. Now, as regards our spreads, they are aligned with those of a debt of the same level of ranking as can be found elsewhere. Now, what's going to happen on portfolio yield? As you've said, we have yield on H1 of 3.8 for the first semester and 3% for P&C, which means that we have fairly long durations on these portfolios. And you can see in the presentation that we gave the analysts that the 25 billion yield invested over the first semester is 2.9%. So there is indeed a dilution of the portfolio yield through the yield of new investments. Now, as we demonstrated to you, the guaranteed rates of new business are much lower than those of the portfolio, so we're relatively confident in our capacity to maintain an investment margin of 70 to 90 basis points over the medium term. Any other question? Are there questions on the phone? No. Another question from Madame de Guigné. As regards the sector in France, several players have shown fairly low profitability results over the first 6 months. And are you expecting a movement of consolidation in France that you could be a member of perhaps in the future? Our main preoccupation, we do not need to make acquisitions on the French market. The dynamics of our networks for distribution are such that we bring in new policyholders every day. Of course, we want to gain market share, and Nicolas' teams do. This does not necessarily involve acquisitions. And what we can also believe is that perhaps the more difficult position of some of the players will have a rationalization impact on the margins and tariffs rather than lead to major groupings. Microphone, please. As regards long-term debt, retirement, protection for corporations, we are beginning to see new business coming our way because we hold a stronger position amongst the major players on the market. So we are satisfied with our position in France. We believe that the dynamics of our business are good. And then I would like to make a general macroeconomic statement, is that corporate tax in France is much higher than elsewhere. Social charges are much higher than elsewhere. As regards asset allocation in an open economy, we need to be able to make the best use of the capital we have. It is not necessarily required when there are other choices available to us in the choices of our business approach to bring in more capital to this territory. Two more questions. As regards the trend in Belgium and in Switzerland, as regards P&C, Belgium is plus 60%, drop in Switzerland 10%. Are there exceptional elements which appeared during the first 6 months of the year? And secondly, the composition of underlying earnings in life insurance, because you give a number a little above 1 billion for protection and health, and this is not very high if we compare this to 1.4 billion in life insurance. Well, it's not all, but it represents 2/3. Yeah, 1.2. Yeah, but this is a figure pre-tax. It's a pre-tax. No, you're confusing pre-tax and post-tax. Yeah, so this represents 2/3. Something that did not appear as significantly in the past, perhaps. Traditional life insurance contracts, when are contracts, what you are discovering something that is obvious. You are discovering what you've been saying for several years. In other words, we want to emphasize protection and health because we believe that these areas generate growth and margins, and as of now, represent the greatest share of our life insurance business. If you go back to the first or second slide of our presentation, this is fine. It's the preceding page, in fact. So here we have protection and health, which represent an important component in the group's business. It is a bearer of margin, and this does not mean that savings are not profitable. But we find ourselves in a situation where equity markets are down and where interest rates are down, whereas in 2003, 2007, the most dynamic component were, of course, here savings markets, because interest rates were hiking up and yields were high. I would say that this growth engine has been working not as well since 2008 and has been relayed by protection and health products. There's nothing even close to rocket science here. This has been happening for several years. The good news is that the efforts that we are making to strengthen the development of these activities are bearing fruit. In other words, their share in the business mix of the group are increasing. In Belgium and Switzerland, there's nothing extraordinary. Dennis can give you details. Switzerland is highly profitable. As regards Belgium, what happened during the first 6 months of this year involved a turnaround in the tariffs and also a drop in natural disasters, which of course have led to an improvement in P&C results. And Switzerland is an extremely profitable and well-managed market, and we have seen here a very interesting market But we have had hailstorms, which occurred on June 29th and 30th, which have uploaded the natural disaster needs. Combined ratio in Switzerland must be around 90%, 90. No, it's 89% actually, says Dennis. Any other questions? Yes? At the back of the room? Séverine Solier, La Tribune. We hear it said very often today amongst industrial players that European companies will return to growth thanks to innovation. I wanted to know what innovations you could still find in the field of insurance. You've just indicated that margins are particularly appealing in protection and health. Are there innovation mines, and is it envisageable that we could return to savings, protection, savings, health, retirement health, combined products, such as some market players are discussing today? You know, it's the ink bottle innovation. It'll always be this way. I think that the very first issue is the customer's needs. Will this remain a strong requirement as we see it today? And I think that the turbulences, the short-term turbulences of the macroeconomic situation obscure the landscape, which is in fact highly favorable, because this quite obviously, because we are an aging population, creates more and more needs, and the pursuit of the enrichment of the world, which is strong in emerging markets, but which is weaker, but which in the long term is not negative either in mature markets, involve that we need to guarantee more and more wealth. So the fundamentals as regards demand are quite strong. Now, the share of the competition from the states is dropping in influence, so to speak, or is weakening in influence. And we can see that social indicators are dropping back. Either we can see the reduction of the scope of guarantees, or when these scopes are not limited, the players are not able to actually fund these guarantees. So for products that we must be able to bring to our clients depend on an increasing appetite for such products. But it doesn't mean that all the players in this area on our market will actually capture this new appetite. So in order to do this, we need to implement a three-prong approach. Client needs, strong control over distribution channels, and strong capacity to manufacture new products. And I think we have this three-prong approach because we are a model which benefits from its geographical and technical spread. We have critical mass. We are capable of having what industrial companies have as far as R&D is concerned. AXA is one of the three major players. We're the first in life insurance and the third in P&C worldwide. So we have specialists who work with us who are, if not the best, amongst the best in the world, to come up with products which are responding to evolving client needs. Now, we modernize and we innovate around this distribution by making it multi-access. And this gives us the possibility of coming closer to our clients. And we are gaining more and more knowledge also. Although marketing was for a very long time underdeveloped in our business sector because it was highly regulated, we have maintained and will continue to bring into our teams strong talents in the development of a new approach. Look at the success of the dependency products in France over 1 year. Dependency is becoming an extremely familiar product, but since in France it takes about 15 years between the moment where we actually become aware of the existence of a problem and the implementation of national reforms, and when it's not 30 years, as happened with retirement. So Nicolas' teams have put on the market modernized dependency products and have exceeded their sales objectives. Why? Because these correspond to a fully expressed social need for which we have a solution. So in this country, there are 6 million women who deal with a spouse or a parent that is dependent. The state cannot deal with this. The state no longer has the money to deal with this. We can make these products available to the people who need them to help them solve their problem. Shedding another type of light here, distribution. We have a traditional network that is doing well, that we are helping the agents of to become more multi-access with new modes of distribution as well. Today, we are the main player on direct markets with activities in many different countries. The growth of our revenue is double-digit in these areas because it is a modernized distribution channel. These are two examples. We could look at commercial lines, small and medium-sized corporations everywhere, all over the world, are a growing segment because the world is growing, and they are underinsured. The products who can come forward with commercial insurance will help the development of these SMEs. So these are illustrations that are good examples. Now, what you also need to know, however, is that there's another side to this coin. Innovation doesn't always work. We've made mistakes. The first variable annuities generation put on the market products that were not properly calibrated, something that we experienced in 2009, 2010. We now have better calibrated products. But of course, innovation plays a very important role. It doesn't only bear on products. It is a daily battle, and I think that we conduct this battle satisfactorily, although we always believe we can do better. I think that there are many innovations in the service area, and it is an emphasis that we apply worldwide and also in France, where under Nicolas Moreau's leadership, we've been able to see the development of this AXA.com product. And also, I think that there are a number of experiences that we've accumulated over the year, which give us a strong differentiating factor and also a risk prevention approach to improve service to our customers and draw on new service approaches and new technology applications. Any other questions? Myself, Dow Jones, Wall Street Journal. I had a question on your variable annuities business in the U.S. Could you tell us more, please? Sure, Dennis. Our variable annuities business in the U.S., as you know, has undergone a difficult period between 2008 and 2011. We have strongly reduced our market share from 9 to 4%. We now have returned to this business area with less risky products. We've returned to growth. The first 6 months of this year, much less risky products, and therefore the market has been largely rationalized, but the dropping interest rate environment still remains difficulty on the road to the management of these very long-standing portfolios that date back to the past. Also, the evolution in the behaviors of our policyholders who have repurchased much less than they did in the past. So the economic activity, which is returning to growth, less risky products, and the adjustment of our reserves due to lesser buybacks from our clients who, because of lower interest rates, remain longer with their policies. Microphone, please. We here see a technical provision loss of 540 million euros in this activity. No. The business area had a negative pre-tax result, 10.9, and of course here there were reinforced reserves, which gross amount were in dollar figures, I think, that you saw. It was a euro figure. Okay, well, it was a gross figure, pre-deferred acquisition costs and pre-tax, but this was offset by other components such as the earnings or the income brought in by this business line, and also other elements such as the fact that we have interrupted the approach to the sellback of some contracts, which of course has had an impact on provisions. So the net impact of this activity is minus 10 million euros. Yeah, you can't take the charges in your analysis without revenue, without income. If you only look at the outflows and not at the inflows, then of course we're not in the right position. I think that you have the explanation to your question. Any other questions, ladies and gentlemen? Are there questions on the phone? They're saying no at the back of the room. Okay, well, if there are no questions on the phone, if there are none left in the room, we are going to close the session and thank you, and I hope wish you a very nice holiday.